Hello, everyone, and welcome to the CPA Lady Podcast. My name is Marjorie McPike. I am a CPA in Southern California, beautiful Southern California. I have been in public accounting for 13 years, and I have decided to take the information that I have learned in public accounting and to help others that are not exposed to a tax professional. I have with me today Michel Valbrun. He is a CPA in his own right, and I'll let him tell us a little bit about himself.
Yeah, thanks so much, Marjorie, for having me on. It's an honor and a pleasure to be on this podcast and be able to share with your audience. But yeah, as she mentioned, my name is Michel Valbrun. I also go by Money Making Mitch as well. And I'm a certified public accountant, tax strategist, award-winning author, writer, and contributor for Entrepreneur Magazine and a whole bunch of other things that I do as well. But really what I do and what I'm most passionate about is helping individuals, specifically entrepreneurs and investors, save $10,000 to $100,000 legally and ethically through proactive tax planning strategies. So really showing them ways that they could save money during the tax season before tax season hits, because I think that's really the key when it comes to saving money on taxes. When you hear about Donald Trump, Jeff Bezos, and all these other billionaires not paying any money in taxes, that's exactly what they're doing.
Yes, that's awesome. You see, I have this big smile because I love talking taxes.
I can tell you're passionate.
I love it. I love it. Especially say $10,000 to $100,000. You know, that's awesome. So everyone wants to hear that. And I like that you say proactive, or you said before it happens, because now is the perfect time to be planning for 2020 and 2021, right?
100%. So one of the misconceptions, or like at least people don't really consciously think about, is that when it comes to tax season, so you have the way that the tax preparation works and taxes work is it's based on the activity for the year. So when it comes to tax time, so based on, because we're shooting this podcast in 2020 and 2021, your taxes are going to be based on everything that you did in 2020. And when it comes to tax time, whoever you're working with, CPA, tax preparer, whoever, that individual can only do so much because it's going to be based on the activity that you did in the previous year. So when I say proactive, that's a key part of that, because you need to proactively, one, be aware of what you're able to do with your taxes. And then also another key part of that is implement those strategies in order to be able to receive the benefits and results of implementing those different activities.
Right. So now is the perfect time because you still have time to make changes in 2020 that will affect your 2020 taxes. So
100%.
Even with an entity structure, I know I've been talking to people about changing their entity, and it's like, if you're going to start it right now, it's not going to make that much of a difference because you only have such a short period of time, but you're being proactive for 2021. So when you start out January 1, you already have your entity in place, or you already have your structure, and you know what you're supposed to be doing, so you can start the ball running.
Yeah, that's a great point. Yeah, so legal entity structure is a huge way to save money on taxes. So yeah, that a lot of people are actually, over 70% of business owners are actually in the wrong legal entity, believe it or not. So yeah.
Yes, love it. I had a question. So what are some tax strategies that you would recommend, or that you have seen at this point of the year, especially for someone, like I mentioned before, my big thing is you were a W-2 employee in 2019, but 2020, the pandemic hit, you started selling courses or products. And so you're going to get a 1099K, you're going to get, a 1099 miss,
Mm-hmm.
It's going to be different. What can you do?
Yeah, that's a great question. And it really depends on a couple of things. So really, one of the things that you need to look at is especially if this is your first year, you want to look at what does the IRS allow you to deduct. So really, when it comes to tax savings, really the main ways to save money on taxes, these are like the main categories here. So you could maximize deductions, retirement, insurance, legal loopholes, and also advanced planning strategies. So I'm going to talk a little bit about deductions. Deductions is a huge one. And then talk a little bit about retirement. So deductions, there's 4 requirements that the IRS has in order for you to be able to deduct expenses from your business. So a deduction is just literally, let's say you make $100,000 for the year, a deduction is going to be the expense or the amount that reduces that $100,000 to whatever the profit is, and then you get taxed on the profit. So that's the number that we need to focus on. Your profit in the IRS's terms is also called taxable income.
Right.
There's different ways to get to that number, but taxable income is what you want to be focused on. So the 4 requirements, I like to say tax-free, and it's a mnemonic. So I don't know if you had this experience too when you're studying for the CPA exam. I got really used to mnemonics and acronyms and all these things to help you memorize and remember different things, especially with going to school. So
right.
I still apply it to my life now. So tax-free. So the first part of that is free is the F. So it needs to be for business purposes. So whatever expense that you have, it needs to be for your business. It cannot be something that you're doing in your personal life. If you do use it in your personal life, that's not deductible, and you can, risk getting audited or having issues down the line with the IRS. So you don't want to have those issues.
That's a good one. I know you're on a roll, but that's interesting because I was just talking to someone about dry cleaning, and it's like you can't just deduct the dry cleaning for your clothes. You know, it has to be specific for a business. It can't be for your personal life. So like if it's a uniform for like a security officer or corrections officer or something like that, that's specific that they wouldn't wear in the streets, then yeah, you can deduct that, but you can't just deduct, your suit. So thank you for saying that.
Yeah, that's important. And so many people ask me too, like, well, can I deduct from my haircut? I'm just like, you're pushing it. and listen, there's specific instances where you could do that, right? So I think let's say you had like a really high end or big, it's well known, a big brand deal where you have to do like a photo shoot and they're doing the makeup and the hair and all that kind of stuff. Okay, maybe you can get away with that. As far as your dry cleaning is concerned, you could do dry cleaning if you're doing business travel. So it always has to be going back to business. So if it's related to business, then that gives you the ability to do it. So some dry cleaning on a business travel, they do allow you to deduct some of that. So that's key. But in your personal life, there's no way. Right. And I think with the dry cleaning, it has to be over like a certain period of time. Like it's to the point where it's not reasonable for you to be able to travel that long without having to do that. So that's the first part. So the for business. The next part of that is considered regular, right? And the IRS's term, it's what they call regular is ordinary. So ordinary would be what's going to be ordinary, customary for your business. So again, with the business, a lot of business owners, what's ordinary is driving. So you would have mileage or auto expenses. You would have meals that you have with meeting clients or different prospects, potentially employees. Supplies is a big one for business owners. So those kind of things that needs to be ordinary for your business. It needs to make sense for your business. So for instance, let's say that you own a dry cleaner, but you spend money on golf clubs, right? That there's no correlation there. So it has to make sense for your industry. And that's one of the reasons, like when you, typically when you get your EIN, they ask you what is the occupation and that classification, because they actually use that classification to use computers to like be able to pick up on inconsistencies or anything that's weird. It's like, okay, typically people in this industry, they spend this much money on this category, they buy these kind of things. So you want to be careful with that. So that's the second piece of that. The third part of that is going to be E, which is essential, right? The IRS calls that necessary. And essential, again, is expenses that are necessary for your business to function comfortably in a good way. So again, and that's another thing too, I want to point out with the tax code, it's not very specific. They want to leave it open for interpretation. So it's really up to you as a CPA, as a tax preparer to really know, you really take like what feels like the right thing to do. So they really give you some authority in the sense that they're allowing you to use a moral compass. So you don't want to take advantage of that. You don't want to abuse that. One thing they specifically say is the fourth one is, I call it extravagant less. The IRS says it's non-extravagant activities. So again, like let's say you're having a business meal. Typically for a meal, you spend maybe $50, $100 if it's two people. If you're going out and trying to spend like $5,000 on a business meal and you're only making $10,000 in your business, that's going to raise some red flags. Like you're going to have some issues there. So you don't want to do that. So you want to keep it reasonable in that sense. So yeah, deductions are going to be huge. So for my new business owners, make sure that you are keeping good books. What I mean by good books is recording your income and expenses spreadsheet, QuickBooks.
Right.
But just make sure you're tracking that.
Awesome. 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 I love it. Okay. So we talked about deductions, entity structure. There's one you mentioned, insurance. So there's two that I want to go to: insurance and also retirement. Because I was talking to someone yesterday about retirement and setting up an entity and putting it in a 401k, and they were asking about like a self-directed 401k.
Mm-hmm.
So I know that there are benefits to setting up retirement for business owners.
Yeah, 100%. So with as a business owner, there are several retirement accounts that you can create for yourself. So some of the main ones is going to be a solo 401k. Yes. So it works very similar to a traditional 401k that you would have at your company or when you're working a W-2 job. Same contribution, a deduction maximums that you can put in there. So I believe for a single filer, it's $19,500 that you can contribute. And basically when you put that in, it reduces, again, your taxable income. So it's pre-tax, so you don't pay any taxes on it, but you do have to pay taxes on it when you pull out that money. And you also get fines and penalties when you pull out before your retirement age too. So you want to make sure you don't do that. So you not only, if you pull it out before retirement, you get hit with the ordinary tax on that, and you also get hit with like a 10% penalty on that. So you do not want to pull that out early. So that's one retirement account that business owners can create for themselves. There's another one called a SEP IRA. Mm-hmm. So SEP IRA is a really good retirement account that you can use as a business owner. You can contribute up to 25% of your salary and compensation, or $57,000, whatever is the lower amount. So that you can do that as well. And one of the great things about the SEP IRA is it's one of the few tax deductions and tax strategies that you could actually do after the year.
After the year.
So, you can do this on, like, let's say you're in a crunch, you do get your taxes done and you realize you have like $50,000 in taxes you got to pay, and you're like, oh my God, what am I going to do? Mm-hmm. You can go ahead, work with a financial planner, have them take that lump sum of money, put into a SEP IRA account, and be able to take that deduction. So that's a really good one if you are a salaried self-employed individual.
Awesome. And you can actually, you have until the extended deadline in order to fund that, right?
Yep. So really, yeah. So, and the extended, and that's a great point too. So with the extended deadline, it pretty much acts as if it's the actual filing, the actual traditional deadline that they have. Mm-hmm. So yeah, it works the same way. So pretty much before you file your taxes, then you can contribute and fund that a SEP IRA account.
SEP IRA, yeah.
And then another thing too, another caveat, another great thing with the SEP is that it's typically when you set up these other retirement accounts, you're pretty much required to kind of be consistent with how much you can contribute. With the SEP IRA, it's kind of like, it's optional.
Right.
So you can kind of put into it whenever you want to.
Mm-hmm. And you can adjust the amount that you want to put into it. So it's the amount that's going to benefit you the most in that year.
Exactly.
Good point. Good point. So insurance, are you speaking just of health insurance, right?
So both. So we have health insurance and life insurance.
Okay.
So with insurance, some of the things that you can do with insurance is one, so health insurance premiums, depending on your legal entity structure and everything, you're able to deduct for that with certain plans. I believe as an LLC sole prop, if you have a spouse in the business, you can pay and have them be the beneficiary and be able to deduct for those premiums. So that's one strategy you can use. And then as far as like whole life insurance, so there's a lot of whole life policies, the policies that pretty much you pay for your whole life, you're able to fund those accounts. And there's some whole life accounts that you can contribute to, and then you can be able to pull some of that money out tax-free, like borrow against that money. Okay. So that's why I call it like a tax strategy, because it's a way that you can put money away and then be able to take it out and not have to pay taxes on it.
Okay. Awesome. So we have the deductions, we have the solo 401ks, the retirement contributions, health insurance. What do you see? Do you do bookkeeping for clients, or do you kind of teach them or recommend that they do it themselves as far as having good financial records?
Yeah, so I do offer bookkeeping, and what I recommend doing is, whether you work with myself or whoever, or you do it yourself, definitely keeping up and maintaining those books is going to be critical, because when it comes time to tax season, we're going to be those are the numbers that we're going to be using in order to figure out what your deductions are, how much you could write off, and understanding, what that income is. And the IRS is also going to want to see that in the event that you get audited. They want to, if you have that already organized, instead of trying to create it like last minute,
Right.
it's going to save you a lot of headache
Right.
down the line. So,
right. And save you a lot of money, because you don't want to give your tax preparer a box of receipts, right?
exactly. Yeah. So you got, if you try to come and give me a whole bunch of receipts, either I'm going to
Like,
say no, or I'm going to charge you a lot,
Yeah.
a lot of money. So, because it's bookkeeping, like that's what bookkeepers do. We take the information, the transactional information, and put it into a financial statement. So
Right.
that takes time.
So, right. Do you find a lot of entrepreneurs have like a lot of fixed assets, or does it just depend on the entity or the company? So, because when I'm thinking about it, it's like, it's mostly like a computer monitor. It's not a lot of maybe desk stuff. So more larger companies will have like the major equipment that they can deduct. So is there anything in particular that you find with the smaller business that they could use?
Yeah, just like you said. So really, a lot of small business owners, they have the laptops, they have the computers. Office furniture is going to be a huge one.
Mhm.
Office mats, those kind of things. So yeah, those are pretty much what you find with most small business owners, just because there's not a huge capital investment that you got to make up front.
Right.
Because
Mhm.
if you do get into those heavy fixed assets, if you're buying buildings and trucks and all those
Right.
kind of things, that's a significant investment. So yeah.
Right. But it's still good to know that information and still to track it.
Yeah, 100%. Yeah.
Which that's kind of good. People, I tweeted something the other day about, I think it was, I would never tell someone not to make money so that they didn't have to pay taxes. It's like, you just figure out how you pay your taxes, right? And if you're making a lot of money, it just means that you should be paying taxes on it. So it's a matter of talking to someone to figure out the best strategy for you.
Yeah, exactly. I think what I found is that too many people allow taxes to influence their decisions too many times. So they look at like, as far as like politics, like if we look at politics, some people make political decisions based on who's going to send me the most money on taxes.
Right.
Or you have people who want to write off a whole bunch of things, or show like no profit, or show, or to spend money just so they can pay no money in taxes.
Right.
And it really, when you really think about it, for the average person, maybe the marginal tax rates are the federal tax rates that you have. So you have the 10, 12, 22, 24, 32. Right.
Yeah.
So let's say for most people, it's like you're around that 30% tax margin. So you're really getting 30 cents on the dollar that you spend. So if you spend $1, you get like a 30% tax savings from that. So it really is a cost benefit analysis. You have to be a good business owner. I think, to me, that's number one. And then once you think strategically on how do I spend my money, then we can look at other ways that we can use the tax code to be able to get more write-offs, or be able to move money around in order to help you save some money on taxes.
Right. I like to move money around, because I was talking to someone, I've been doing a lot of talking, but talking to someone recently about, they wanted to set up an SCorp, for their business. I was like, okay, yes, that's good that you want to do that and pay yourself a salary, but you also have to look at it. You're basically moving money around, so that it's taxed a different way. So that's not something that you would just sit down and do yourself, because you want to look at the whole picture, right?
Right.
Tax planning is looking at the whole picture, how it's going to affect your individual return, how it's going to affect your business return, so it's the whole picture.
Yeah, 100%. So those kind of decisions really require an analysis and looking at everything, because as you mentioned, you're really just shifting income around. That's all you're doing. Now, granted, I do believe that switching to an SCorp, if you're making like $50,000 in profit, It does, there usually the net benefit is worth it, but you do have to looking at that, because you still have to pay taxes on whatever salary that you give yourself. So you got to pay payroll taxes on that. Then you got to pay taxes on the profit that gets passed through to your personal. And, you know, depending on what your tax rate is and everything else that you have going on the personal side on the 1040, that's going to impact, you know, what that looks like. Right.
But then you can also take a distribution from your SCorp, which is the cash, in order to pay your taxes. So
yeah. Yeah, there's some benefits.
Yeah,
sure.
So there's benefits. So awesome. Do you do anything with estate planning or generational wealth? Do you have any suggestions for that?
Yeah, so really when it comes to estate planning, I pretty much walk my clients through helping them. I really get them started on the process. So actually when it comes to estate planning, I partner with an attorney on that. And that's what I recommend everyone doing, because that's really a legal matter. And just so if people don't know what estate planning is, so estate planning is really looking at your assets in your life and then coming up with a plan in order to pass that on to your children and your family or whoever else that you want to be the beneficiary of that. So what I do recommend is, yes, everyone take a look at setting up a trust.
Yes.
Because that trust is going to, again, be able to, you can put your assets and your businesses in that trust. And also too, you want to reach out and work on getting what's called a revocable trust. A revocable trust is a trust that you can create where you can, if you needed to change it, you have the flexibility to do that. And it literally provides instructions on, if I die, this is how I want my money to, this is how I want my money to go. I want $100,000 to go to my daughter. I don't want her husband to get any of it because I probably may not know this guy, may not like this guy. I want all that money to go to her, and you can be very specific and clear. So yeah, you definitely want to work with an attorney to detail that out. But typically I do provide, I kind of open the door and kind of give you my clients like high level overviews of what I think their estate needs to look like, but then to actual, like the actual implementation of it, yeah, we'll definitely partner with an attorney on that.
Okay. And so I'm sure you recommend to the millennials, the new people that are, I shouldn't say new people, but 2020 millionaires, I'll just call it like that.
Yep.
That they speak to someone, because a lot of people are saying that their goal is to leave money to the next generation. And so that's why another part of my podcast is getting that information to them on how to do it. And so if you made $1 million this year, it's like you should be doing something this year in order to set some of that aside so that it goes to the next generation. Right.
Yeah, 100%. That all needs to be planned up front. I know for some people it's an uncomfortable conversation because, we want to feel like we're immortal and we're going to be here forever. But, the only thing that's guaranteed is death and taxes. Literally. Those are that's the only thing that's guaranteed is death and taxes. So you gotta know your taxes, and you gotta be prepared to transfer your assets when you die, because you will die.
Okay. You will die. Amen. You will.
Yeah.
You mentioned something about a loophole, like tax loopholes. So tell us about one of those.
Yeah. So a tax loophole, and I use the word loophole loosely, no pun intended, but loopholes is typically, so the IRS has rules in their tax code, and based on the interpretation of that code, there's different things that you can do. Sometimes they may challenge it, but there's a lot of pretty solid loopholes, so to speak, that you can use. I think a really big one is hiring your children through your business. So that's a really, really good tax loophole, so to speak. So with hiring your children, right, as a business owner, you want to have employees, right? So you have people, you pay people through the business. One of the great things is if you have children, you can now put your children to work for your business. And chances are, if you do have children, they're doing something for your business, whether they're setting up the camera for you, whether they're on social media for you, they're doing something for you. So why not pay your children through your business and really set them up? Not only one, will it create a learning moment for them to understand how to make money, exchanging time and value for money, and then also helping to manage their money too, because another thing with paying your children is they need to have a separate account. So it can't be, it can't be like you just giving them cash. Like it needs to be a separate account. There needs to be a distinction there to do that. And then you pay your children, and then you're pretty much able to do that tax-free if they're under 18.
Right. And that's by paying them less than the standard deduction, right?
Exactly. Yeah. So 12,400. So as long as you pay them 12,400 or less, then yeah, there's no tax liability for anyone. What
about like what age? I mean, you wouldn't want to pay your 2-year-old, right?
No, you don't want to pay your 2-year-old. And that's the thing too. So the IRS still leaves it open, and they don't give you a minimum age, because again, they want you to use judgment. My stance on that and my belief is that 8 and older is a good age. I think an 8-year-old can, take out the trash. Right. They can, maybe help you with recording equipment, those kind of things. But yeah, I would say anything lower than 8, you're really taking, you're really risking it. But I know some people say, well, my child's a model and I pay them through the business and all that kind of stuff. And I mean, if you're willing to risk it, again, it's not illegal. It doesn't say you can't hire your children to be a model, but they may question that. So that's what I'm saying. Cause you do have to record the hours that they spend time doing it, and then you have to record the job that they're doing, and it also needs to be the what you pay them needs to be match the market too. So if you're having your child take out trash for you and you're paying them $200 an hour, like that doesn't make sense. Yeah. So you gotta make sure that it's reasonable for what the job is. But you don't have to pay the minimum wage because it's not they're not affected by the labor laws, right? Yeah. So there's some states, I think New York may have some issues with the labor laws, but yeah, it really is, the labor laws are really on a state basis. But yeah, there is more flexibility because you are the parent. So yeah, it's easier to maneuver the child labor laws on that. Okay. So what has been your greatest tax savings for a client? So what's been like like the greatest tax savings, and then kind of like your biggest challenge, Yeah, I would say my biggest tax savings, so I actually recently worked with an NBA player on his tax planning. Like he's like I think he's probably one of the top 10, if not 20 highest paid NBA athletes right now. And we are going through his taxes and his situation, and we didn't even get into detail yet. Just like from a phone conversation, looking at what he's doing, I was able to save at least, it was 65. I think it's probably gonna end up being like over 200,000 in tax savings, which is insane. Wow. Because this guy's making, if you imagine, that's another thing too, right? So when you look at tax savings, the more money you make, the bigger the savings is going to be. Right. So for him, he's at the highest tax bracket. He's at 37%, and then he has state tax on top of that. So he's probably like over 50% of his income is going to be taxed. So yeah, I was able to, and the same things I mentioned on the podcast, right? We looked at deductions, legal entity structure, retirement, insurance, both planning strategies. And then there's things that he's looking to do with investments in order to help him save money on taxes. So it's going to be, I think it's probably going to end up being over like 200,000 in savings. Awesome. So it's not like it's I wouldn't say foreign or super complicated. It's just a matter of having the conversation. Being transparent enough to come and sit down and talk to a CPA or a tax, professional and say, hey, this is what I have going on. This is what my books looks like. What can you help me to do? Right? Yeah, 100%. Yeah, there's no secret society. You don't need to sacrifice anything to be able to take these deductions. You don't have to be a certain race. These things are available for everyone, and it's just a matter of one being aware of it. Right. And that's really the most important part of it. And going back to awareness. So there's one of the methodology that I used when I help my clients with anything is what I call the CPA Success System.
Mm-hmm.
So the first part of that is C. So it's clarity. So helping someone get clarity on currently where they're at. So identify, okay, where are you at? So currently where you're at right now is that you're overpaying in taxes by $50,000. Okay, cool. Now we know that. So once you get that clarity and once you get that awareness, and most people don't even have that clarity and awareness,
Right.
they talk to me and they're just like, I need some help with an LLC. And then I'm looking at, and I'm asking questions. I'm just like, the LLC is kind of like the last, like that's going to be words right now. Like we can talk about the LLC, but like you're about to overpay in taxes. So let's work on getting that fixed, getting that cleaned up. And I'll work with you on getting the LLC and all that kind of stuff set up. But people don't have that awareness. So that first part is clarity. You get the awareness. Okay, I'm overpaying in taxes. So what's next? The second part of that CPA Success System is P. So it's power. So having the tools, the knowledge, the information that you need in order to save and accomplish your goals. So for this individual specifically, their goal is to not pay the government $50,000 in taxes that they don't need to pay them. So that's the second part of that. And the last part of that is accountability. So working with a professional, working with someone who can help you navigate and work the code, because it's one thing to get knowledge, but to actually implement and do that and use that knowledge correctly is extremely important. Because a lot of times I've noticed is, especially with Google, everyone thinks they're an expert, right? Their degrees from Google, and they're like, sometimes I put out posts or whatever talking about legal entity structure or tax entities and talking about the distinction there. And I literally have people saying like, that's not true. I'm just like, what do you like? Like it's 100% true. And, but there's just a lot of misinformation. And even if you know the information, implementing that correctly is going to be critical too, because if it looks a certain way, the way it's not supposed to look, then you're going to have issues down the line with the IRS.
Right.
Like with with paying your children. So people will hear that and they'll go ahead and start paying their children, right? And not knowing the accountability piece, not working with a professional on doing that. So what they'll do is they'll probably just pay them out in cash, or pay them through their own account, or not record the hours, or not write the job description, or pay them $2,400 for typing something.
Right.
So like not being aware of those different nuances is important.
Oh my goodness. I'm like so excited. I love this stuff. Okay, so I know that a couple things. Charitable contributions. Can we touch on that one? I know that it's increased, so it has increased this year, so people can give up to 100% of their AGI. Do you find people doing that? And then I know a lot of people are looking to start like nonprofit organizations so that they can donate to their own charity. So
yeah.
Thoughts?
So a couple of things with the charity is great. I would say that charity, unfortunately, just happens to be an area that's audited a lot, just because people take advantage of that. They abuse it. They lie. They just use that as a tax write-off. So yeah, if you're going to do charitable contributions, make sure you're doing it right. Make sure you're doing legally, ethically, have it documented. Make sure that it's for a
It's a 501c3.
Yeah, 501c3, right? So make sure that's a qualifiable organization that you're able to give money to. So that's one thing with it. And as far as starting a nonprofit, I get that question a lot. Again, going back to like goals for me personally, I would want an individual to start a nonprofit to benefit society. Right. So yeah, so that should be like number one. And I say that because a lot of people were just like, can I create a nonprofit so I can save money on taxes? I'm just like, I mean, I guess, but like, you shouldn't do it for those purposes, especially one, there's, I mean, you want to try to do right by society, and two, the IRS knows that people want to do that.
Right.
So if it looks like you're just doing it for tax purposes, then that's going to end up biting you in the butt anyways, because they're just like, okay, you're not even really doing what you said you're going to do with this nonprofit. So yeah.
So you do have to be actively using your 501, your nonprofit organization for the intent that it was designed, so if you have a specific purpose, then yes.
Exactly.
Okay. But it is a good way to give, some of your earnings, if you find
Yep.
a notable cause, then write a check, right?
That's right.
And right. You can do that with like IRAs and things as well. So one of the things that I like to talk about, I'm actually working on something for my church where you can give away like appreciated stock, and you don't pay, you get a charitable contribution for the fair market value. So say for instance, you bought stock for $100 10 years ago and it's worth $1 million, you're going to get the $1 million charitable deduction because it's the fair market value. So that's huge. That could be a big tax savings for someone, that has those type of things. So it's another way to look at it, another area to look in.
Yeah, 100%. I'd even touch enough on the IRAs, but to your point, IRAs are amazing in that way. So the IRAs, the individual retirement accounts. So one of the great things about them, one of the benefits out compared to like the 401k is that it gives you more flexibility. So you can invest and use that for anything. So some people, they have their real estate in an IRA, and you can invest in, you can have like invest in real estate using your IRA account because it's flexible. You can do stocks, you could do real estate, you could do commodities, you could do trading cards. Like let's say you purchase or artwork, you purchase artwork and appreciates in value. Like you can use that. That's an investment. So you have more flexibility to be able to manage that and how you can invest.
Okay. So if someone was looking to have a retirement account with their business in order to, for the deduction, reduce the taxable income, would you recommend a 401k if they wanted to do something self-directed? Is there a self-directed 401k or would it be a self-directed IRA?
Yeah, so really I think the self-directed word just comes from you're able to manage what the investments are.
Okay.
So I think that's what I think that's why they use the word self-directed. But yeah, essentially with the solo 401k, you do have to create like your own retirement account and set that up with a brokerage company. So it's almost the same concept. It's just that you're limited to whatever mutual funds or stocks or whatever they have in that brokerage account.
Okay.
Yeah, so typically like the S&P 500 and all those different mutual funds.
Awesome. So let's talk about your accomplishments really quick, because you said you're an author. You write for Entrepreneurship magazine, right?
Yeah.
And I saw you were on the cover recently. Was that you actually on the cover, or was that a Photoshop?
That is me manifesting myself on the cover. I'm claiming it. I'm calling it. But I appreciate that. Yeah. So two things. Yeah, I recently wrote a book. Prolific Profit: How Successful Businesses Maximize Profits to Dominate the Market. So that's my hat right there, if you could see it. So
awesome.
Yeah, Prolific Profit. And yeah, I actually wrote that book and released it January 2020 of this year. So MLK Day, which I thought was important for me just to honor his legacy and everything he's done. And yeah, really in the book, I talk about taxes, I talk about accounting, I talk about all the different things that you need to do as a business owner. Whether you're a new business owner, whether you're a seasoned business owner, I guarantee that you're going to learn something from that book. So that's available at prolificprofit.com. You can also pick it up on Amazon. It's an award-winning book, so I got an award for that book. It was also, the forward was done by a New York Times bestselling author. So it was great to have that on the book. And yeah, Entrepreneur Magazine. So I recently became a contributor and writer for Entrepreneur Magazine. So I released an article actually a few weeks ago for year-end tax planning. So we talked about tax planning. So I have a pretty detailed list, and it's like the official guide. It's like year-end tax planning guide for 2020. Awesome. So I was able to write that for them, and they accepted it. They loved it. So that's available for you, free information, good information. I talk about some of the things that you need to know about PPP loans as well. There's a couple of things that you need to be aware of. So that's important to take a look at. And then, just continuing to build and, just get my brand out there, help as many people as possible. So yeah, it's been an amazing journey.
It's so exciting. So exciting. Very cool. And you are in Atlanta, or what area are you in?
Atlanta. Yep.
Atlanta. Okay. Awesome. And then on Instagram, it's Michel Valbrun, right?
Yes. Michel. So MICHEL VALBRUN. So Michel, it's a French name. My parents are Haitian.
Or Haitian, awesome.
Yes.
So did you go to school in the States, or how long have you been in the States?
Yeah, so I'm pretty much born and raised in the States. I actually grew up in South Florida. So I was born in Miami, and then I ended up moving to Fort Lauderdale, Broward County, and spent most of my life there. And yeah, so it's been great. And I recently moved out to Atlanta, Georgia. So
awesome. I have family in Broward County, so Pompano Beach area. Yeah.
Okay.
So, I've been down there a lot. So nice. And I actually have family in Atlanta, so it's supposed to be coming out there maybe in the next 6 months. So once we get some kind of relief from COVID, some
right, yeah. Definitely meet up. No, I love that.
Get out and do so. Awesome. Well, Michel, I want to say Michel. So you say Michel, but then you say Money Making Mitch.
Yes. So it's a long story, but I would say I used to go by Mitchell a long time ago. Okay. Yeah. So there's a part of my life I used to go by Mitchell. So I do say Money Making Mitch. One, because people tend to remember that better than Michel. People really struggle saying Michel. People like Money Making Mitch. It's based on a movie called Paid in Full, so people tend to like that.
Awesome. You're doing great things. I love the education, the tax planning, the entrepreneurship, helping young people to be successful and to save money. I love it. So I appreciate you being on my podcast. Thank you for taking the time. Thank you for sharing your knowledge. If there's anything that I can do to help you answer questions, whatever, collaborate, let me know.
Absolutely. No, I appreciate that. No, like I said, it's an honor. I really appreciate you reaching out to me. And I think this is important too. I think I just want to acknowledge you for reaching out to me and connecting with me, because I've noticed that I think CPAs, especially CPAs of color, just to be transparent, I think we could really do a better job at collaborating, working together. I mean, there's 7 billion people in the world, over like 350 million in the United States. So, I mean, there's a ton of people, a ton of clients there. I think there's no reason why we can't collaborate and do more things together and really like spread the message. I think it's so, there's so much misinformation. There's so many, I hate to say fake business gurus, but people just keep putting out wrong information, and a lot of people are confused. And I think especially with COVID, given all the job layoffs and everything, people are really understanding the importance of entrepreneurship and starting your own business. And it's honestly, it's difficult, when you start off trying to figure it out, like understanding all the rules. It's a completely different ball game. It's not the same as a W-2 where taxes are being taken out for you and everything. So no, I appreciate you and using this platform and, giving knowledge to the people. So thank you.
Yes, thank you. I mean, I did. But that's what it's all about, helping other people, spreading the knowledge. We may have, everybody has different skills and different talents. We're in different areas. Everyone doesn't want to work with someone virtually. You may want to actually go and sit down and talk to a CPA. And so if we're able to let people know who's out there and what information is available, I think it's just going to benefit everyone. So,
absolutely.
Awesome.
Thank you so much.
Thank you so much, Michel. Did I say Michel? Love it. Thank you.
Thank you.
And I will leave Michel's information in the comment section below. I'll have all his Twitter, Instagram, prolific
profits.
Yes, I will have that in there as well. Awesome.